So Yieldmax ETFs are only for people that like money.
Oh, I like money.
I mean, maybe in the world of Idiocracy, that's okay. Which, by the way, is a great movie. But you're not an idiot, you're smart, and you'll be even smarter after watching what I have to say. Or do you see what I'm saying? No. You're hearing what I'm saying, I think. Anyways, these Yieldmax ETFs are spreading like a virus.
There is another organism on this planet that follows the same pattern. Do you know what it is? A virus.
So here's my uneducated, knuckle-dragging take on these ETFs, and I at least know that I'm in very good company.
It's an absolute horror, and I'm ashamed of my country that so many people believe in this kind of crap, and that the government allows it to exist. It is totally, absolutely crazy, stupid gambling with enormous house odds for the people on the other side. So that is something that there's only one correct answer for intelligent people there. You just totally avoid it.
What's up? I'm Russ, and you've popped onto the Dapper Dividends YouTube channel, and I think that Yieldmax really means they're getting the maximum yield from you. So right from the horse's mouth, you can find this page linked below. One thing you gotta know is that your upside is capped if the underlying stock should really take off and rapidly increase in value. And while your upside is limited, you are exposed to all the downside if it tanks. And another fun downside is also the high fees, a nearly 1% expense ratio. And then there's the taxes on the distribution or the dividends that you receive from the Yieldmax ETFs. They are taxed unfavorably at your ordinary income rate instead of the lower qualified rate if it is in a taxable account. And as you're going to see, more often than not, these ETFs underperform the stocks that they track. And if the synthetic covered call options and strategies that they employ to give you these ginormous yields don't pan out, they may return some of your initial investment as a distribution, which will shrink and erode the net asset value over time. And they warn that the funds may not be appropriate for all investors because of the risks that they carry. But if you are an appropriate investor, I'd love for you to share in the comments below why you think I'm wrong and Yieldmax is great, which they're not. Hey, did you hear that noise? It's time to let you know about an affiliate ad where the setup is going to be much longer than the ad itself. Click the link below to save money on an annual Seeking Alpha premium subscription. And also found in those links down below is the link for this spreadsheet, which you can find. I put it together on April 18th, 2024, so as of then, everything's current. And if you want to do this for the low price of free, go to dividendchannel.com, click on calculator, punch in whatever stock ticker floats your boat. We'll do TSLY here. It's inception date November 11th, 2022. And then other, we're going to see how it performs against Tesla. Click Chart 10K Invested. It will show you where you'll be able to see the growth of $10,000 with dividends reinvested. And we see that Tesla has a loss of negative 15.15%. But look at TSLY with all those amazing high distributions, not even including the expense ratio. You're down 21.61%. So it would have been much more profitable for you to have just stayed invested in Tesla. But I digress. We go back to our handy dandy sheet here, and you will see a whole bunch of red. We have the Yieldmax ticker. If you click on that, it will bring you to the fund page from Yieldmax. And out of the 19 funds that they have as of this recording, only 5 outperformed from their inception date the reference asset that they track, which were Apple, APLY. You would have got a total return of 1.91% to the Apple return of 1.45%, but that was a Yieldmax gain of 31%. Amazon, 1.56%. That's really close. That's just about even. And then Microsoft, ticker MSFO, you would be up 4.21% again, but this is not including any other taxes or fees you would have had to pay on that. The big winner that they had so far is the PayPal Option Income Strategy. You would have had a 12.44% return versus 7.35%. So that's almost 70% up. And then the last one is the C3.ai 2%. That one's almost within the margin, especially if you had to pay taxes. So there it is. I don't understand why people continue to invest in these. It does not look like a good long-term investment. And if I wanted to, I would just rather buy the reference asset, they call it. I'll call it the underlying stock. As you see with Coinbase, ticker CONY, that's the Yieldmax Option Income Strategy for Coinbase. You've gotten a 98.92% return. Pretty good. But the reference asset total return, if you would have just bought Coinbase on the day that this started trading on August 14th, 2023, you would be up basically 170%, and Coinbase does not even pay a dividend. So I don't know about you, but I like money, don't you?
Yeah, I like money though.
Now, if you didn't know, you can head on over to DapperDividends.com, sign up for our free weekly newsletter where I share with all of you weekly portfolio moves, a couple other thoughts, some stocks going ex-dividend in the coming week. And in this floating little box right here next to my head, I had a fantastic chat with a new Canadian friend of mine, Mr. Kanwal Sarai, on his YouTube channel. So if you want a little bit of a longer conversation, I hope you click it. And if you do that, we will talk to you, you over there.